Good evening, everyone. I request you to kindly take your seats. We'll start with the press meet in the next 5 minutes. Thank you.
Standing.
Good evening, ladies and gentlemen. On behalf of Bank of India, I extend a warm welcome to all the esteemed journalists who have joined us today in person, as well those who have joined us virtually from different sectors across India. We are pleased to announce Bank of India's financial results for Q1 FY27. I would like to introduce the Bank of India's management team present for today's press meet. Shri Rajneesh Karnatak, MD and CEO, Shri P.R. Rajagopal, Executive Director, Shri Subrat Kumar, Executive Director, Shri Rajiv Mishra, Executive Director, and Shri Pramod Trivedi, Executive Director. We will now begin this press briefing. To start, I would like to invite Shri Rajneesh sir to address the gathering, after which we'll open the floor for the Q&A. So, over to you.
Thank you so much, madam. So, good evening, everyone. Warm welcome to this press conference. Good evening, ladies and gentlemen. Thank you for joining us today ahead of this announcement for our financial results for Q1 FY27. The first quarter of the year has been marked by changing global environment. While West Asia uncertainties continue to trade-related developments remain fluid, and Indian economy has remained on a firm footing, inflation has remained broadly contained, although the uneven progress of the monsoon and its implications on food prices continue to warrant close attention. Domestic economic activity has remained steady, and the Reserve Bank of India has maintained a supportive policy stance to sustain the growth. These developments have created a favorable environment for the banking sector. The new financial year has opened on a steady note for us. Building on the progress achieved so far, our focus is on sustainable growth, prudent lending, and disciplined execution across our businesses. My remarks today are divided into three parts. The first being the institutional initiatives that we have taken, the second part being the business, and the third part being the profitability and the asset quality of the bank. So as far as the institutional initiatives that we have taken to sharpen its market focus and accelerate the growth, Bank of India has established a dedicated centralized sales vertical to streamline the business outsourcing. The functional vertical holds end-to-end responsibility for driving customer acquisition, enhancing business productivity, and also boosting the revenue across the segments. Complementing this is the establishment of Strategic Business Branch, which is the SBB at Mumbai, dedicated to capturing the high-value pool buyouts, co-lending, trades business, and also the supply chain financing. With an aim to enhance the digital convenience and seamless banking, Bank of India is now also offering virtual personalized debit cards in the RuPay variant. Customers can instantly apply for and self-activate these cards directly through the BOI Omni Neo Banking application. The fourth initiative is with respect to the evaluation of its customer user experience. The bank has introduced the BOI Star Choice Current Account, which gives clients the unique capability to select the last 7 digits of the account number. The bank operationalized a centralized video customer identification process center also in Mumbai, enabling seamless end-to-end digital account opening through e-platforms without manual intervention, driving operational efficiency and a frictionless customer service. Digital banking has taken a big leap forward in Kenya. Bank of India Kenya mobile app is now live, bringing customers the convenience to anytime banking, real-time transactions, and seamless M-Pesa integration in the country of Kenya. To revamp the banking existing cash management services, BOI Services Limited is facilitating a proposed mechanism to deploy dedicated field staff on the ground. This on-the-street presence will allow us to leverage existing corporate relationships, driving both deposit growth and also broader business opportunities. As regards the business is concerned, the global business has grown by 16.57%. YOY from 15.06 lakh crores in June 25 to 17.55 lakh crores in June 26, with an incremental growth of 2.9 lakh crores, 49 lakh crores. Global deposits have increased by 14.90% on a YOY basis from 8.34 lakh crores in June 25 to 9.58 lakh crores in June 26, with an incremental growth of 1.24 lakh crores. Global deposits have increased by 16.15% on a YOY basis from 7.10 lakh crores in June 25 to 8.25 lakh crores in June 26. CASA has increased on a YOY basis from 2.82 lakh crores in June 25 to 3.02 lakh crores in June 26, with an incremental growth of more than 20,000 crores, and CASA ratio stood at 36.68%. Global advances have increased by 18.64% on a YOY basis from 6.72 lakh crores in June 25 to 7.98 lakh crores in June 26, with an incremental growth of 1.25 lakh crores. Domestic advances have increased by 19.20% on a YOY basis from 5.65 lakh crores in June 25 to 6.74 lakh crores in June 26. RAM advances have also increased by 19.75% on a YOY basis from 3.28 lakh crores in June 25 to 3.93 lakh crores in June 26, constituting 58.3% of the advances as on June 26. Now, as regards the profitability and asset quality is concerned, Operating profit has improved by 25.99% on a YOY basis and stood at 5,051 crores in June 26 as against 4,009 crores in June 25. Net profit has increased by 36.23% on a YOY basis and stood at 3,068 crores for June 26 as against 2,252 crores in June 25. Net interest income has increased by 12.61% on a YOY basis and stood at 6,833 crores for June 26 as against 6,068 crores in June 25. Non-interest income increased by 19.07% on a YOY basis and stood at 2,579 crores for June 26 as against 2,156 crores in June 25. Global NIM stood at 2.52% in June 26 as against 2.55% in June 25. Slippage ratio stood at 0.24% in June 26 as against 0.33% in June 25. Credit cost has also declined to 0.15% in June 26 as against 0.17% in June 25. There has been improvement in the asset quality with the reduction in both gross net NPA ratio and net NPA ratio. GNPA has improved 111 basis points on a YOY basis to 1.81% only in June 26, and NNPA has improved by 24 basis points on a YOY basis to 0.51% only in June 26. As regards the PCR is concerned, it has improved to 93.83% in June 26 as against 92.94% in June 25. As on 30th June 26, bank's CRAR has improved to 18.69% from 17.39% as on 30th June 25. Going forward, the outlook for the Indian economy remains constructive, supported by stable consumption patterns, continued public investments, and healthy credit demand across the sectors. However, geopolitical developments and the evolving financial market conditions continue to warrant close monitoring. Against this backdrop, our guidance for FY27 stays unchanged. Global advances to grow at around 15 to 16% and global deposits at around 13 to 14%. Our approach will continue to be guided by balanced growth with focus on improving our deposit mix, supporting credit demand, maintaining sound asset quality, and making our processes more efficient through technology and better customer service. Our Q1 FY27 results and investor presentation released today provide detailed insights into the quarterly performance, key business developments, and outlooks for the remainder of the FY27. Thank you once again for joining us today, and now I invite you for all the questions. Thank you so much.
Thank you, sir. We would now proceed towards our Q&A session. Before we proceed, would request you to kindly raise your hands for the queries. One of our representatives will pass on the mic to you. Also, kindly restrict to just 2 questions at a time, allowing other journalists to interact with the management team. For subsequent questions, we'll come back to you later if time permits. Request you to please identify yourself and your organization before asking a question. And for our station media, please send your questions to Concept PR representative, Ms. Neha, via message or WhatsApp. Her number is 8879040248. I repeat, 8879040248. We will now proceed.
Good evening, Team BOI. Thanks for your detailed briefing. Good to know that you have introduced a host of digital products and services. Sir, can you give me some estimate in terms of what are the targets for the current FI and what are the estimated IT capex devoted for certain services that you would escalate it or scale it as you go ahead? Thanks.
Yeah, thank you so much for this question. So as far as the IT services are concerned, see, we have been spending a lot as far as the IT is concerned, digital banking is concerned, and also on cyber security. And consistently in the last 3-4 years, bank has been spending substantial money both in capex and opex. And also, as far as I said, already said that we are not only spending on the IT part, but also digital banking also, and also on the cyber security. To give you a sense, the budget that we have kept for ourselves for FY27 is somewhere around 9% of our annual OPEX expenditure. That is the kind of money we have spent, and the incremental delta over the budget on FY26 over FY27 is around 20%.
Good evening, sir. Kabir here from Infomist. Sir, the share of retail term deposits in your overall deposit book is constantly coming down.
Yes.
It's at around 42% now. So just wanted to know where this deposit growth is coming from now. Is it bulk deposit, CDs, or you're using SLRs? So just that. And second question is on FCNR, sir. How much have you raised so far, and what will be your target till September?
Yeah. So as far as the first part is concerned on the retail term deposit side, as you rightly observed from the slide, that yes, though we are growing in the amount terms, absolute terms as far as our retail term deposits is concerned, however, in the percentage terms, it's coming down. That is correct. So the entire credit growth which is happening, if you see our numbers, so our deposit growth has been somewhere around 14%, and our global advances growth, credit growth has been somewhere around 18%, 18 to 19%. So the difference which is there, it is mainly supported by the item which is the loans which we are taking, the borrowings which we are taking from others, and obviously the gap which is coming is also being supported by the bulk deposits which is coming. So presently the RBI guideline says that anything which is above 3 crore is the bulk deposits. So in order to have a better cost of deposits, so what we have done, we have rolled out a campaign for about 3 to 25 crore deposits, wherein we feel that the rate of interest is on a lower side, and bulk deposit typically is deposit which is 25 CR and above. Though RBI definition still says it is for 3 crores and above, there we are seeing good traction as far as that deposit is concerned, between 3 to 25 crores. Through that, we are trying to optimize our total deposits in order to fund our credit growths. So if you see our this year by quarter numbers, so our deposit growth has been more than the global advances growth. So there is a gap of nearly 5 to 6,000 crores over there. So in this quarter in Q1, we have been able to outpace our deposit growth in comparison to our credit growth which is there. So the bulk deposit, if you see, it is somewhere around 20 to 21% of our total domestic deposits. So as far as the FCNR question is concerned, there we have already mopped up more than 200 millions of FCNR deposits, and we have a guidance of around 1.2 billion as far as the FCNR deposits is concerned. So the timeline, as you are all aware, that it is up to 30th September, and now we are seeing lot of tractions, and it is coming across the geographies. If I just give you an example, like it is coming from Canada and USA also, it's coming from Europe, particularly from UK, it is coming from East Asia also, it is also coming from Singapore and Hong Kong. We are getting some of the FCNR deposits from Japan also. So we are present in 15 countries across the globe. So we are getting these across the globe, including Africa, where we are present in 4 of the countries. So in the domestic market also, we are having 13 FGMs, and whatever FCNR we are getting, it is spread across all the 13 FGMs from where it is coming. So 1.2 billion is our target that we should be achieving by 30th September. Yes, very much. Yeah.
Good evening, sir. This is Shrishti Sharma from ETBFSR. You've already covered FCNRB that you'd be raising 1.2 billion. You've also talked about bulk deposits. Of the 1.2 billion of FCNRB that you'd be garnering, how much of cushion would it give to you in terms of deposits? You're already outpacing credit in terms of deposit, but how much of bulk deposit would you be letting go once you have these 1.2 billion? How much of the same would you be using to lend? And what kind of leverage would you be offering to the customers on this FCNRB?
Yeah. So as far as the utilization of this deposit is concerned, FCNRB deposit, So 1.2 billion, when we are saying it converts somewhere around 12 to 13,000 crores in Indian rupees. So this money will be substituting basically our reliance on our bulk deposits, which is there. So it will substitute and help fund the credit growth as far as our overall global credit growth is concerned. That is the first point. Second point, your question is with respect to the leverage which is there. So as a policy, we have taken that we'll be giving a maximum leverage of 9 times. So it depends on customer to customer. We have a matrix into that, but the maximum leverage that we would be allowing would be somewhere around 9 times.
And so the UAE restrictions that were there, any relaxation you were expecting from the country in any way? Because since it is one of the hotspots for Indian NRIs, I'll add another question also. In terms of margins, what kind of trajectory are you seeing? And will FCNRB lead to any kind of dilution to your margins? And also, if you could, help us understand ECLGS 5.0, how many applications did you receive? How many sanctions and disbursements you've made so far? Thank you.
Yeah, as far as the East Asia is concerned, where see, we are a pan-India bank, lot of our clients have their family members who are working in the East Asia, and they are sending money, and many of them are getting the FCNR made. So we do not find any challenge as far as that is concerned. So we have a branch in Dubai, which is a DIFC branch, from where we cannot solicit any FCNR. But definitely, just to give you a sense, we have more than 240 our AD branches, NRI branches, and branches which can accept FCNR deposits in India. They are more than 250. So as far as that is concerned, so we have a good team lined up. We have a strategy already in place. All our FGMs and zonal offices are working on it. We have 69 zones. All the zones are garnering some deposit or the other as far as the NRI business is concerned. So we are very hopeful that $1.2 billion that we have set ourselves a target will be able to achieve. We have already crossed, as I said, 200 million as we speak. As far as the margins are concerned, see, FCNRB deposits we are giving at somewhere around 6.5%. The swap is being taken care by the Reserve Bank of India as per the policy. And since it is, we do not have to maintain any CRR and SLR. So this is a deposit which is cheaper than the bulk deposits which we are getting in the market today. So in that sense, definitely as far as the cost of deposit is concerned, our cost of deposit may come down with that. Yeah, ECLGS, as far as the ECLGS 5.0 is concerned, we already have a pipeline. We have already a sanction of around 5,000 crores, out of which we have disbursed around 4,600 crores already. And we anticipate that we should touch a figure of 8,000 crore by the time this comes to an end. So as of now, no, we are watching the global situation, particularly the West Asia crisis, very closely. We are monitoring that situation. We have identified certain centers, though we have not gone to the board. Internally, we have identified certain centers. But once this West Asia crisis is eased out, then only we'll be taking a call. Thank you.
Please raise your hand.
Yeah.
Please go ahead.
Hi, sir. I am Archishma from Money Control. I just wanted to understand two questions, actually. So both your NNPAs and GNPAs have seen an improvement. And this is despite the West Asia war that sort of set in from late March. So what were the kind of contingencies or provisions that the bank have to cushion itself? And secondly, I just wanted to understand the bank's stance on AI. How is it sort of being deployed across workforce functions? And what is the kind of cost efficiencies that it has seen throughout the quarter? Yeah, these are my two questions.
Yeah. So as far as the asset quality is concerned, so if I just give you a sense of that, our gross NPA has come down from a figure of around 19,000 crore in June 25 to now somewhere around 14,400 crores as on June 25. Similarly, the net NPA also has improved from a number which was nearly 4,900 crores in June 25 to somewhere near to 4,000 crore only as on June 26. In percentage terms also, there has been good improvement in our gross NPA percentage from 2.0 1.02% to now only 1.81%, and net NPA has also improved significantly from 0.75% to now 0.51%. So the basic levers for that were that we have a very strong collection monitoring system. If you see our SMA numbers also in one of our presentations, you will see that our SMA book, which is 5 crores and above book, which was around 7,000 crores as on June 25, it has come down to 4,000 crores. In fact, it was 4,700 crores in March 26. It has further come down to around 4,000 crores. So that is the kind of improvement in the asset quality and the robustness in the collection efficiency which we have done through close monitoring through our credit monitoring department and the zonal collection centers. So our SMA book, which is 5 crores and above, presently is only 0.52% of our standard book. That is the kind of operational efficiency we have built. Another thing that we have done is that we have internal target that whatever the fresh slippages happen, out of that, the total gross cash recovery should be more than that. So if you see in this quarter also, our gross cash slippages have been somewhere around 1,800 crores, against which our gross cash recovery is somewhere around 1,900 crores. So whatever we have slipped in this quarter, we have recovered more than that. So that kind of culture and system has already built into the account, this bank, which helps in improving the GNPA and the net NPA in the bank. And further, obviously, we have also improved our PCR because of that. As regards our AI is concerned, so a lot of tools are there as far as the AI is concerned. We already have a data lake project going on under Project Aditya, in which lot of AI enabled tools are there in that, and lot of analytics driven leads are going on to the system, to the branches. They are flowing from this package, which is the data lake project, to our CRM package. From CRM, it is flowing to the branches by way of various messages in emails and other kinds of things, which is our internal database, which is going to the staff, and then staff is marketing through these leads. And if you see our presentation, there also we have done a business of more than 13,000 crores out of these 18,000 crores. 18,000 crores, I stand corrected, through those analytical leads which are there. So AI tool is a tool which we are now using very robustly. Now this has started being used in this financial year in a very robust manner in this quarter also, and in the coming time we will be adding more products under this, and more business will be coming out through the AI. No, not at all. Not at all at this juncture.
Good evening, sir. Can you elaborate more on the M-Pesa integration with the Kenya app?
So M-Pesa is one of our. So would you like to take this? Yeah, मैं ही बोल दूँ. Okay. So M-Pesa is our app, which is a mobile kind of app given to each of our customers. See, Kenya is one which are overseas center in which we are having 5-6 branches, and there we have a retail license with us. So majority of our customers in Kenya are retail customers who are having saving accounts and current accounts. There we have provided this mobile banking to them, and they can transmit their money from one account to another within the Kenya through this M-Pesa app. This is like normal mobile banking which we do in India.
What are the other features besides the customized number for the current account?
Where in Kenya? No.
You mentioned you've introduced customized current
account
numbers.
Yes. So current account, we have launched quite a number of products for the current account. These current accounts are for number one MSMEs also, who do not want to avail loan, but they want to have only a current account with the bank. These current accounts are always also for the service sectors who want to have current accounts, but they do not finally want to avail the loan. And lot of services we are providing in that through internet banking, mobile banking, we are providing, and lot of services like free this RTGS, NEFT we are providing, cash collection we are providing, depending on the average quarterly balances that they maintain. So a lot of benefits we are providing to these current account holders which are maintaining balances with us. Thank you.
Hi sir, Anjali from Business Standard. So do you have any plan to tap the overseas market? And also your NBFC lending has increased a lot year on year. So what led to that?
Yeah. So as far as the overseas market is concerned, so under these RBI guidelines, so under the overseas funding and borrowing, and the MTN, medium term notes, we are planning to have around $2 billion we'll be planning to raise up to 31st December under the overseas borrowing and the MTN. That is the number we have targeted for ourselves, depending on the market. Maybe it may not happen in the next 1 month or so, but definitely in the coming months, we will be targeting around $2 billion. Yeah, NBFC lending. So NBFC lending, if you see, not much has increased. Only a granular increase has been there as far as the outstanding is concerned. And we are well within the cap as far as the overall NBFC exposure to our global loan book, which is somewhere still we are at around below 15%, which is our threshold given by the board. And majority of it is in the AAA and AA bucket only.
I'm Manju from Financial Express. I wanted to know your projections for growth.
Please,
for
can you
deposit.
introduce yourself first?
Yeah, Manju from Financial Express.
Okay. Yes, thanks.
What is the projected growth for deposit and credit? And can you hear me?
Yeah.
Yes, no.
What are your projections for credit and deposit growth? And also, what sort of corporate growth are you seeing? RAM, you've seen is a good growth, but on the corporate side, what sort of growth have you seen?
Yeah, so as far as our guidance for FY27 is concerned, so for our deposit, it is somewhere around 13 to 14%, and for advances, it is 15 to 16%. That is the guidance that we are giving for our deposit and advances growth. As far as the corporate growth is concerned, we are very confident that we should be giving a YOY growth in corporate of double digit, and it should be somewhere around 12 to 13%.
What sort of demand is coming on the corporate side?
So as far as the demand is concerned, if I give you the sense for the domestic credit and also the international corporate book, which is there, we have a pipeline of somewhere around presently 70,000 crores. So that is the pipeline which is available with us. This pipeline includes industries, different industries. This pipeline also includes infrastructure, and this pipeline also includes some of the new gen sectors which are there, also green energy, which is typically our solar energy and wind energy.
So what was the number? 70,000?
70,000 crores, which includes domestic corporate and also the international.
And on the FCNR side, do you have any leveraged product, and what is the kind of leverage you are giving?
Yeah, as I said earlier, the leverage is 9 times we are giving the leverage. We have a product and we are marketing that product.
You're also looking at tie-up with foreign banks or domestic Indian banks?
No, we are not looking for any tie-up for that leverage product. We already have a big client base. As I said, that more than 250 branches we have, which can take FCNR deposits, and these are the depositors who can come to us and ask for a leverage. So the clients know that when we are offering FCNR deposits to them, we are also offering a leverage if they want. So we are not tying up. We are very confident that whatever the leverage is required by these customers, we'll be able to provide to them directly.
And the 2 billion that you're raising under the MTN, you would go in bits and pieces, right? You would not go at one go.
No, it will be on a graded manner. There is a glide path for that. So any FCNR which includes the leverage has to happen by 30th September as per RBI guidelines. So the borrowing for that, RBI has allowed a timeline up to 31st December, which include OFCV and also the MTN.
Okay, thank you.
So we have some questions which have come online. We have a question from PTI Manish, who wants a clarity on the ECLGS numbers as he had missed it.
Okay. So as far as the ECLGS 5 is concerned, so we have set ourselves a target of somewhere around 8,000 crore we'll be able to give by the closure of this scheme, which is 2.5 trillion, which the government has said by the time it gets exhausted. So we should be there at around 8,000 crores. As far as the present number is concerned, we have already given a sanction of somewhere around 6,000 crores, and the present outstanding is somewhere around 4,600 crores. Thank you.
Thank you. We have a question from the Economic Times, Atmadeep. He wants to ask you, on account of FCNR deposit, how much reduction in cost of deposits are likely? The second question would be, given the concern related to the monsoon, are there any slowdown in credit offtakes likely, especially in the small loan segment? And his third question would be, given the concern related to monsoon, are there any slowdown It's the same question, so you can skip that. Maybe
Okay.
just answer.
Thank you. So as far as the FCNR reduction in the cost of deposit is concerned, to give you a sense, we are raising FCNRB deposit, 3-year deposit at 6.25%, 3-year to 4-year FCNR at 6.30%, and the 5-year FCNR at 6.50%. Bulk deposit present rates are going at somewhere around 7% plus. So definitely there will be a saving of somewhere around 50 to 60 basis point on this FCNR funds which we will get. So when we are saying that we'll be raising around $1.2 billion, we will be raising somewhere around 10 to 11,000 crores. So out of from that we'll be saving around 50 to 60 basis point. That will be the reduction as far as the cost of deposit is concerned. As regards the monsoon issue is concerned, yes, there are certain issues as far as the data which is coming about the monsoon. There is delay and there may be a 10% deficit overall. But at present, as on 30th June, Q1 of FY27, there has been no impact as far as our asset quality or the book is concerned, whether it is NPA or the SMA. SMA numbers, we have already seen that the SMA numbers in fact have come down from the June number which is there, which was 4,700. It has come down to somewhere around 4,070 crores only. So presently there is no impact, but we are monitoring the situation very closely. If any impact would happen, it may happen in the Q2 quarter only, but it is yet to be seen in the Q1. Thank you.
Thank you. We have one more question from Mayush Shetty, Times of India. You said FCNRB deposits will bring down cost of funds. Does that mean deposit rates have bottomed out?
No, it does not mean that, because see, FCNR funds, the rate of interest that has been given by the banks is a totally different matrix which is there. It not only takes care of the internal rate of interest scenario, but it also takes care of the rate of interest scenario which is ongoing in foreign countries also. Like we are competing for deposits from our NRI customers from the rate of interest they get in their local countries where they are residing, say a USA or a Canada or a UK or France or say Singapore, Hong Kong or say Dubai or anywhere else. So this rate of interest is line with that to fight the competition with the rate of interest they get in international centers. So as I said, I will not repeat again and again, the gap is somewhere between 50 to 60 basis point from the bulk deposit to the FCNR rate. That is the saving that the banks may get on raising of the FCNR deposit in relation to the bulk deposit, the present rates which are going on.
Great.
Thank you.
Any question from the audience? Yes.
This is Nachiket from Business Today. Just one question from the ongoing West Asia crisis. Have you seen any sort of stress, emerging stress in some of your sectors? What is your outlook there? Are you monitoring that as well, I'm sure?
Yeah. So we are monitoring our entire credit portfolio very closely as far as the West Asia crisis is concerned, because there are certain sectors where we feel that some hit may be coming or there is some slowdown over there, particularly the chemical sector, ceramic sector, these kinds of sectors, and some of the sectors which are dependent on imports and exports. So these are the sectors which have been hit. But as of now, there has not been much impact. Whatever little impact has been there because of the increase in their working capital cycle, that has been taken care by the government by giving the ECLGS 5.0 scheme. So in those accounts where there has been elongation of the working capital cycle, these borrowers have come to us and asked for the ECLGS, and we have already, as I said, disbursed around 6,000 crores have been sanctioned. So the impact in those borrowers where there is some impact, they have already taken some ECLGS kind of cushion to obviate that issue. Thank you.
Any other questions?
So what are the updates on your wealth vertical? By when is the rollout expected?
So wealth vertical as such, we were not planning to build a separate wealth vertical, but definitely we have a focus now on wealth management, right? So, we have a subsidiary which is called BOIS Services Limited. Through that, we are now marketing some of our wealth products, number one. Number two, what we have done is we have a sales vertical now. We have a general manager sales, under whom also not only we are marketing our liability products, we are marketing our asset products like retail loans, MSME loans and and food processing loans, but we are also marketing our wealth management products. So wealth management is a key lever now in our growth strategy and also for increasing the non-interest income. We are not having a separate wealth vertical, but definitely there are certain points, dots within the bank which are now connected with each other, so that we are able to increase our wealth management product sales and also to improve our non-interest income. Yes, yes. So as far as that M&A transactions are concerned, RBI has already come out with the guidelines. We have also got the board approval from our board. Our corporate credit department is aggressively working on it. We have already created a cell within the bank who are working on it. We are evaluating certain transactions. So some of these transactions, frankly speaking, we may not do on a sole basis, but we may join other lenders along with that transaction. Like we may form a consortium to fund the acquisition.
Okay. If I relate it to the other two peers, they've partnered with foreign banks. Is that going to be the strategy for you as well?
Since we are in overseas also, see, we have already also 15 countries we are present and overseas branches also. As and when any opportunity is there, we can definitely also partner with some of the foreign banks also. Already in present primary and secondary deal transactions, we already partner with some of the foreign banks.
Okay, and since you said this will come under your corporate credit, how big these transactions can look like, and how much of growth can it push forward for you in FY27? Have you sort of earmarked or calculated all this for your books?
So it is too early to say at this stage what will be the number as on March 27, how it will play out finally, because these sanctions, once you give the sanctions, the disbursal also take time. So as a bank, we are more concerned about what will be the final disbursal and what will be the amount in the books rather than the sanction that we have given. So it is too early to give a number at this stage. Maybe when we sit again in the month of October and the Q2 results, maybe at that time we'll be able to say something.
Okay, one more clarity. Since you said you have formed a cell in your bank, for what kind of capabilities do you have to build to go about acquisition financing? I'll end it now.
Yeah, capabilities are very simple in the sense that we have to upskill and reskill the staff immediately as far as this RBI circular and guidelines are concerned. So our staff and the GM and CGMs in our bank, they are talking to large peers in our system also to understand how they are building that the ecosystem within themselves. And we are trying to upscale and rescale our staff immediately so that we understand how it is to be done and what are the nuances, not only with respect to the underwriting, but also with respect to the documentation and other things.
Thank you. Can you please send it to the team and we will get it answered for you.
No, there is no, whatever it is there, it is already in the slide. As I said, asset quality is improving. Thank you.
Thank you, Srishti. We'll
Thank
keep
you
it for next quarter.
Thank you, everyone. We'll now conclude this gathering. Thank you so much, Rajneet sir, and the Bank of India's management team. Have a good day. Thank you so much.
Thank you, everyone, for
We
coming.
will meet next in 15 minutes for the analyst.
10 to 15 minutes.
Thank you.
$1 billion किसमें 1 billion दोनों मिला के था ना 4.1 टोटल है तो 1 ये था और 2 बिलियन ये था तो 3 और 1 बिलियन पूरा
result.